Okay, so the first pair we will be talking about, as usual, is going to be the US oil, where we have been anticipating a bullish momentum since yesterday. And if you look at what structure has been given us since the beginning of in the last 24 hours, it appears price is still consolidating. As we can see, our price has been consolidating since on the 22nd of June. We can see our price has been consolidating around this area, hereby pronouncing the indecision that is in this market at this point in time. Like I told you yesterday on this pair, it is very pertinent that we remain very patient, as it is not necessary that we take a trade. Like I used to say, it's better that you do not take a trade and don't lose money than to take a trade and definitely lose money. And for some people, especially the impatient ones, I guess, they might be saying, we've not really made too much money on this on the US oil this week. Of course, we've not. We only had this move to the downside. That was on the beginning of this week. And since then, we've not been able to take any move, as we our prices caught within a consolidation phase, and it's appropriate that we wait for signals to see where price is actually going to go to before we join any potential momentum at this point. So this consolidation phase is more or less like a prep into a decision that's going to be made. And I'm looking forward to participants in the market are looking forward to a catalyst that will send price either side. So one thing I will keep on saying here is just let's just keep waiting and let's see what's going to happen during the New York session. And whatever happens, whatever signal we get, we wait for confirmation to join the rally or decline. So during yesterday's trading session, we identified this key level at $107, and I still hold that bias that we wait for a breakout of that key level and a retest of structure, where we'll be looking forward to a pattern that supports a trend continuation on lower time frame to join the potential rally to the upside. However, when I opened my chart this morning, I noticed this consolidation phase, which looks more like a rising wedge. And if you know your rising wedge very well, a rising wedge is more or less like a trend continuation pattern. And if this happens, then definitely we want to be looking out for a breakdown of structure, that is a breakdown of that bullish trend line, that's temporary bullish trend line, which forms our rising wedge. Then we look out for a reversal pattern that would test that structure before we see a trend continuation going to the downside. So this is my expectation here on the on the on the US oil. So if we are going to be taking advantage of this potential here, then that is, want to be taking advantage of a selling potential on this one, we will be looking. So if we do expect a bearish continuation from this side, we will want to have a key level that will guide our actions going forward. So when I looked at this consolidation phase, I could identify a resistance and support area where price had actually share a confluence. So if we look at the left, we can see that this place has been a support. We had a resistance here, resistance here, resistance here, resistance here, and we had a support at this point, support, resistant, resistant, resistant. And this, for me, at this point, is giving me a clue into how significant that area is. As you can see, it has been a major determinant of price action in the last couple of days. So we want to connect the series together to give us a key level that will guide our action going into the new week, into the New York session, sorry. And when I look closely into this, I can see that this falls at around $105. And if we connect it together, we can see we have something like this. And let us give it a golden color, and let's label it for the sake of clarity. So we have a key level sitting here at $105, and we place this right at the top, and let's put it on the right side of the screen. So we have another key level here to get our selling momentum if sellers actually push price below this area to give us a trend continuation to the downside. So what we'll be looking out for, let me give you a recap of what I'm talking about at this point. I'm saying that if we see a breakdown of this bullish trend line, then we want to be looking forward to a retest of structure where we will be looking for patterns on lower time frame that will support a trend continuation to the downside. And so if that's going to happen, definitely we want to be having our entry point right below the key level here at $105 with selling. We have stop loss right above key level, which is right above the previous structure. We could see somewhere around here, that's around 90 to 100 pips on this one. Then we have our take profit target is going to be an extension of this impulse leg we saw on the beginning of the week. And if we bring out our Fibonacci extension tool, we could make that, sorry, hold on a second please. If we bring out our Fibonacci extension tool, then we have the scenario where we aim at least a minimum of 127.2% of the previous impulse leg. And if that's going to be the case, let's just choose 99.5 considering the psychological level of this figure, which will dovetail to about 500 pips to catch on this one. So this is the second scenario that I'm looking out for going into the New York session. However, we cannot neglect that potential that I explained earlier, that if we see a breakout of that key level at $107, a retest of that structure, then we should be looking for a bullish potential to the upside with a take profit target within the 118 and $112.50 area as we head into the new week. So patience is very, very required at this point. The previous week we've been seeing massive momentum, and based on what is happening in the world today, it is pertinent that we take some caution as we want to see where price is going to break out from this consolidation phase that we are experiencing in the last couple of days. So this is my scenario here on the US oil, and I hope I made much sense in this on this one.